Hello and welcome to Thank God It's Friday. We are being joined by Manish Singh, the Chief Investment Officer at Crossbridge Capital, to discuss the global mood, FI view on India and 3 years of Modi government. Thank you so much for joining us, Manish.
Thank you, Shraddha.
Indices at record highs. The markets are clearly on a risk-on mode. But what is that biggest fear or risk that could actually reverse this trend?
I would say that there is a certain lack of momentum, as you can see in US. What can really reverse it is going to be basically a big crisis, either in Europe or in US. And by that I mean that yes, some people have talked about how people are talking about impeachment, which I think is a very far-fetched thing for US. But if you were to add political risk to it, then that could reverse the rally we have seen recently. Economic data wise, I do not think that we are heading into a recession mode yet, because I think the PMI numbers will be slowing a bit, but you could still have short-term rallies. But it is the political risk which I think which could damage the equity market more than anything else. And with respect to what could help, if President Trump was to enact his tax policies, which he has talked about in the past, that could really boost the market again. So I would be looking at political risk more than anything else if I am looking to see will the markets turn.
Manish, if I were to keep the political risk aside, considering that the Federal Reserve, keeps up with its interest rate trajectory, how would you consider the valuations of the US indices for now, or whether or not they are overpriced?
So, I would say that they are not overpriced. I would say they are more likely fair price. And I point out to one data. If you look at the US housing starts, and housing start is a key data which has predicted recessions in the past. And that housing start currently is at 1.2 million. The average housing start number going back to 1950 is around 1.4 million. So you're still below the peak. And if you actually adjust for the population increase going by 1950, that number should be at 1.9 million. So I do not think that the data is too hot, which clearly means that the valuations are not very hot. So there's room to run. So I would rather see that the valuations are fair. Of course, the valuations in some sectors, let's say financials, or for that matter in healthcare, which is depressed, and financials is very high, is based on follow-up from Mr. Trump in terms of his fiscal policies. So I would say that if he was to enact those policies, and if you were to see some inflationary pressures, then I think you'll come back to a mode where people will think, oh, maybe valuation is too high and Fed is increasing rates, and market will sell off. But I do not see the risk of that, immediate risk of that.
Moving to India, Manish, the Narendra Modi government completes 3 years today. How would you rate this government and its efforts to push reforms? Has this government delivered?
See, I think that Modi government is doing a great job. And, people have to understand that, yes, there are challenges that Indian market has. And there are political challenges. Remember that last year, when Modi government had some electoral challenges and he didn't win some states, that didn't make his life very easy. Now, with respect to India, I always say this to my colleagues and my friends here, is that if you have 20 major problems in India, and Prime Minister Modi has solved, let's say, four of them or four and a half of them, you could look at four and a half and feel joyful about that something is happening and we are moving in the right direction. Or you can look at the 15 other and feel despondent that nothing has happened. So it's a glass half full, half empty view that you have taken. In my mind, he is doing a very good job. In my mind, they are working towards turning India around with the reforms, and Godspeed to him in the sense that he achieves what he is planning to do. There is a lot of holding him back, or political challenges, media discourse, which will always be there. But I just look at what is happening in terms of reform. Look at the GST bill, which will come into effect from July 1st. And I know people have doubts in their mind, but that's a good thing in tax harmonization. So according to me, I think that he's doing a good job. Could he have done better? Absolutely. You could do better in anything and everything that you do. So yes, he could have done better, but I think that I will give him good marks for what he has done so far.
Manish, you just spoke about the GST. Now, it's going to come up with a lot of challenges, especially when it comes to the aspect of implementation. Can you talk us through about some of these challenges, especially the ones which may have to do with earnings, at least in the near term, with respect to corporate India?
Sure. I think India service sector makes up, if I'm not wrong, at least half the economy, and this is clearly going to impact the service sector. So instead of having one rate that we had in the past, we are going to have four rates, which I think is a good idea. That we should have four rates, we should not have just one rate. So the impact will be in the sense that how long it takes for the corporates to adjust to this. If that leads to decrease in sales revenue, i.e. decrease in earnings, then that is not a good thing because that will have an impact on jobs. So if you take a case of the hospitality industry, I mean, if the business starts feeling that they are not making enough money but they are paying high taxes, that could lead to slow down. So you do run the risk of that, and given the importance of service sector for India and the importance of service sector in general, what we have seen, I think any slowdown in that will impact GDP and will impact growth numbers. But like anything, we have embarked on a change, and the change is never going to be easy, and there will be some teething problems, which might come. But that should not deter us from going down a path of harmonizing taxes, which I think is a great thing. What I would not like this to happen. This should not result in another license Raj, where you have government or government inspectors interfering with businesses. That should not happen, because that is what this whole policy is about, getting rid of that. But if we are able to measure the taxes and levy the right taxes on businesses and streamline it and make it easier for the businesses to not just comply but leads to filling up of central revenue, that's a good thing. So I think you will have some challenges, but I'm hopeful that we are on the right path, and it will lead to tax harmonization, which I think is a great thing. Which we will have complained about so many layers of taxes in the past. This is delayering of that and making it simple for people to comply and businesses to follow. So I see some problems happening, but I wouldn't be worried about the repercussions of that.
Okay, Manish, where would you place India in the pecking order of emerging markets, and secondly, what are you doing with your allocations to India?
Sure. So I would say that I would place India right at the top in terms of emerging markets. It is not to say that I am negative on other markets. I think that you see the whole thing about BRIC nations, which was the flavor many years ago. Only China and India who have really come out well out of it. China very well, and India is coming out of it now. And you see how Brazil is falling apart, or at least they have a huge case of corruption going on with the government there. And Russia is always and also ran in terms of how they are run. So, and between the two, I think India has a lot of catch up to do. So if I am an investor and if I am taking a medium to long term view on where the economy is going to perform, where on per capita GDP you are going to see the increased numbers, I do pick India. I mean, of course, you back those growth numbers based on political stability. Now, I have no reasons to believe that we are not in a politically stable environment. So, with emerging market, always comes down to political stability, not a very strong dollar. And for what is also going for India is low oil prices. I mean, oil prices are not going to go anywhere for a long time, because the high oil prices of the past was being delivered by a cartel-like behavior of OPEC, and that cartel is broken. We have a new supplier in shale oil and other things, so oil prices are not going to go higher. So government should make all the changes as soon as it can, and really benefit from this great tide that India is on, and make the changes locally to benefit from it. So on that basis, I would place India very high. Political stability is very important. We are not seeing a very strong dollar. World is stuck in a 2% growth environment in US. If it is stuck at 2%, you're not going to see very strong dollar, and these things are going to help, and the rates are going to fall in India, as we are seeing already on sovereign yield. So I would place India right at the top, but India has to maintain a political stability, that is number one, and India has to come up with policies which are not recursive, looking back. It should be looking forward, and especially taxation policies, which have been criticized in the past of how it has been looking backward.
Alright, I want to move away from equities to yet another asset class, and I want to discuss commodities, oil specifically. Now, oil has extended the biggest loss in 3 weeks after the OPEC supply cuts disappointed the markets. What's the way forward for crude oil in your opinion?
So I see I see a range bound or more downside to oil. So if I take a 12-month view, then I don't think oil is going to break out, or I see the risk of oil being at 40 or lower than the oil being at 50. And the reason I would say that in US, we are in a high cycle. We are ending a big cycle. Look at the loss in momentum on PMI side. So I'm not bearish on US, but I think that we are not looking at an extremely high growth scenario. The second, as I mentioned just now, is that the supply side is going to continue to be a problem, i.e., that you will have a lot of new supply coming. Problem for the oil prices, so new supplies will continue to come on board. I can talk about the UK sitting over here. We have an election, and if you look at the Tory manifesto, it is very clear that government is going to allow fracking, which means that even more supply. Now, in Middle East and OPEC, they are trying to cut supply, but you haven't seen that having as big an impact because there has to be a buyer. If Europe is growing still at 1%, 1.5%, and US is growing at 2%, and you continue to have the same supply or increased supply, there's little room for oil prices to really go higher. So I would say that it is most likely going to be in the range of 40 to 50, and risk more to the downside than to the upside.
Manish, finally, we have a lot of viewers out here who are very new to equity markets specifically. And I do believe that you do make stock picks when it comes to markets abroad, such as US and Europe. What are the three or four most important things that you keep in mind before you decide to buy a stock?
So I would say that, I'm not a momentum investor, so I'm more a value investor. So I look at themes. So I think investing around themes is a great idea. So if I look at technology sector, which has been one of my biggest themes, which I have been following for a long time. When I picked up Amazon almost like 4 or 5 years ago, the stock first went over 400, then it took a beating, it went to $280, and now obviously it's much higher than that. So what I'm saying is that if you pick a theme, and that's what I like, if you pick a theme and you believe in that theme that it is going to deliver value for you, then you shouldn't be deterred by pricing or change in momentum. And that's what happened with that stock, and look where it is headed. Because Amazon controls the cloud computing market, they control the supply market, and it's just getting bigger and bigger and bigger. So you're backing a winner. The other thing I always like is that if you look in your portfolio, if you have 20 stocks or 40 stocks, I think you will have only very few, like let's say 2 or 3 winners. When you have a winner, you go big on that. The idea is not to spread your money around in 50 stocks and believe that, okay, I'm well diversified. Most of the time when people do that, they end up diversifying their returns. So I would say that if you have a winner, if you think you are a winner on certain stock, you go big. And this is an advice that I got from the Paulson Fund. And one thing that John Paulson always mentions is that you have to back your big winners. Because in life, you will not have many big winners. It goes as a life philosophy as well. You will not have many big winning decisions that you'll make in life. But when you make a big one and you think it's a big one, you really go big. And that's what you see in PE industry. You have 2, 3 big performances and 10, 12 average performances. So the key is for you to identify a theme, do your research, and when you're fully convinced, you back them big. Doesn't mean the stock has gone up 50%, you shouldn't invest in it. No, that stock could go 1000%. So I think that's the key philosophy I carry with myself. Do a lot of research. I think research and follow-up is very important. And when I say research, I mean research in first principle. So when I look at what the central banks are saying, I do not read the report published in the newspaper. I listen to central banking speeches as they go live. So the Fed committee meeting, or when Janet Yellen is speaking live, or ECB is speaking live. Watch more live thing. Do your own interpretation. Do your own, and that's how you build your decision-making skills, which are going to be superior to what you are consuming from a third-party information. Do read other people's research, but do follow a lot of things on your own and try to come, because that will enhance your system of decision making and help you.
Well, Manish, one final question. When it comes to football, we've just had Manchester United win Europa. That means they also make it a Champions League. So we will have 5 English teams now in the Champions League. But going on to the next season, who are you tipping for the top 4 places?
Okay, so I support Manchester United, so I'm thrilled about it. I live in Chelsea, and my wife and my 9-month-old daughter, they support Chelsea. So I think that they are thrilled about Chelsea winning the Premiership. But I would say that 4 teams. I mean, Chelsea, Manchester City, and Manchester United have to be there, as we have seen from the season. I think that these teams stand a chance. Manchester United clearly will be able to draw up new players and attract them. I mean, not that it was a problem for them, because look at the kind of players they got, even when they were not in Champions League. So I think the two teams from Manchester and Chelsea are sure quick are going to meet where things are. Then it comes down to the fourth team. In fourth team, I am not as bullish on the way Arsenal has been doing things, so I would not put them top there.
Yes, of
And I
course.
think I would stick with Liverpool. I would stick with Liverpool, that it is going to be these four teams which are going to finish in top four next year.
It must be hard to take Liverpool's name in the top four, considering you're a Manchester United fan. But
Yeah, but I'm an analyst and stock picker, so I go with
yes,
reality
of
as well.
course.
So,
Well, Manish Singh, it was a pleasure speaking with you. Thank you very much for your time.
thank you, Agam. Thank you, Shraddha.